And it's time for another Macro Monday, where I get you ready for the week ahead in 5 minutes or less. As always, this is just a small snippet of our full Macro Monday newsletter. So if you're looking for more in-depth coverage from us on the week ahead, I highly suggest you check out the link that I put in the description of this video, where you will get directed straight to our full newsletter. I think you'll really enjoy it if you have been enjoying these videos here on the channel. As always, we are going to start with our chart of the week. And in fact, it is one of our favorite data weeks of the month. The first week of any month typically brings both the ISM indices and the widely followed payroll report. While Friday's jobs numbers will grab headlines, the ISM surveys are the real tell. Their subcomponents have long been some of the best leading indicators for payroll trends, and that's why we're looking at this chart here. Because right now they aren't signaling a rebound in employment anytime soon. However, if this trend were to break and job openings, payrolls, and unemployment figures surprise to the upside during the current inflationary backdrop, after all, we now have 125 basis points of total stimulus waiting in the pipeline, then yields could rise further, equities could struggle, and the Fed may be forced to reverse course. So that's why we'll be looking at some of these labor market relationships this week, and with the big payroll report out on Friday. So, jam-packed week, as you can see. It's been a while since we've had a week like this. Multiple important releases every single day of the week. I'm going to run through each day of the week and give you one thing that we're looking for. So, as I said, the jobs data and ISM reports will be front and center. But then on Monday, we have the Dallas Fed Index. As of right now, regional surveys have been largely uneven, but the S&P Global Manufacturing PMI at 52 signals modest growth. Survey commentary continues to flag tariff and labor shortages as key drags on capacity utilization. So we'll be checking for a continuation of those trends here from the Dallas Fed that we've seen in Philly and some of the other regional Feds. Then Tuesday, we have JOLTS job openings. Again, anything labor market right now, we're going to be paying attention to. Expect the slow to hire, slow to fire dynamic to continue. Although near-term labor market conditions remain strained, demographics and immigration could cushion the longer-term slowdown. Then on Wednesday, we have the ISM Manufacturing Index. Of course, that's what we're going to be paying attention to. Consensus right now is for 49.3, which is just under the contraction threshold. And then we also get ADP's September survey. And right now, this report might garner more interest than normal, given some of the controversies around the official payroll report. Also, last thing to note, keep an eye on jobless claims on Thursday. They're up this year, but last week pointed at a potential trough. We've talked a lot about labor market data, so I won't go more in depth there, especially because one more on Friday, we have non-farm payrolls. Right now, consensus calls for 50,000 jobs added. As a reminder, last month was only 22,000 jobs added, and the unemployment rate to remain steady at 4.3%. Revisions have been incredibly volatile throughout this cycle, making the release more of a barometer of market sentiment than a reliable GDP signal. We'll be watching whether last month's disappointing 22,000 figure proves to be an anomaly or the start of a trend. Initial claims have trended higher this year. That implies short-term labor market weakness, but last week's data hinted that a cyclical trough may be approaching. So I'm just going to leave you here today. We have PMIs and labor market data this week. Thank you all for watching. I hope you have a great week. Don't forget to subscribe if you enjoy these videos, and I will see you right back here next Monday for another Macro Monday.